Good morning, good afternoon, good evening. Welcome to today's Friday Fix with myself, Ryan, and the awesome guys at AlphaPicks. I've come on a little bit early, but that gives me time to get the legals out of the way, I suppose. So, as usual, nothing discussed on this Spaces session constitutes trading or investment advice or infers any kind of endorsement by PiQ Global Limited, Traders PiQ, or PiQ Suite, or indeed that of AlphaPicks. And that includes the hosts, obviously, which is obviously myself, Alex, and
Afternoon.
good afternoon.
Good afternoon. How are
How
we
the
all?
devil are you? I'm good. I'm good. I'm good. I've done the legals. You'll be pleased to hear. And I have added Jay. There's Cam. Hello, Cam.
Afternoon.
Did I? He is it. Oh, also, this seems like a much better connection than last week.
Finally.
Whatever it was. I was like, there was Jay answering questions from 2019 when we were doing it last time.
With a 15-minute delay. He hadn't paid for his premium subscription to get live feeds.
There were rumors that he was still stuck in some like shack in some Mexican cartel basement or something like that.
Delayed data.
But yeah, exactly. But anyway, moving on. We won't dwell so much on that.
We won't dwell.
Also, I've got to, I feel I owe it to you guys to make a public apology that we're not having our Valentine's Day special together over a glass of rosé and a candle because unfortunately I couldn't make it into London today. So apologies, profuse apologies, and I will make it up to you both.
It's fine. We were trying to think of the best roses are red, violets are blue. Did you see the ECB's tweet this morning?
Oh, I didn't, but they are known for it. But God, what was today?
Yeah.
So
What was
bad.
it, Jesse? It was roses red, violets are blue.
Inflation is on track to settle around 2.
I mean, literally.
Oh God!
Who signed it off?
Do you know what though?
Who signed it off?
You know what? That's a lot better than I thought it was going to be. But what concerns me is genuinely what concerns me is they've paid someone's like billed for that. You know what I mean? It's not like us just saying, "Oh, Jay, knock us up a little riddle." Someone's been contracted some hours to write that.
Yeah, and also it's the official ECB Twitter, so it will have gone through like compliance checks. That's the other thing as well, right? Someone would have sat there and been like, "Yeah, is this too provocative? Is this too emotive? No, I think this is good. Let's do it. So yeah,
I didn't even think about that. Yeah. Oh yeah, I've got no time. Oh yeah, I don't know.
Maybe that's the indication that the euro is headed into the pits again.
Yeah. Can I double down on my bearish bet, please?
Or because of X posts.
Yeah, exactly.
Real fundamental drivers there.
Right, I tell you what, look, I refer to it as event trading. I don't know about you.
Event trading. Headline risk.
Yeah, exactly. Exactly that. You can gloss it up. But anyway, what's been going on today? Not today. What's been going on this week, my friend?
This week. Well, I mean, why don't we start with headline risk actually? While we're on the topic.
Go on. Go for it.
We'll start with our friend Trump. So headline risk galore over the course of this week. Came into the week obviously with him talking about 25% tariffs on steel and aluminium imports. We had him aggressively not tweeting on his Trump social platform on Wednesday after inflation came out, saying that interest rates need to be lowered. And actually, I'm going to read this verbatim. He said, interest rates should be lowered, something which would go hand in hand with upcoming tariffs, 3 exclamation marks. Let's rock and roll, America. Okay, so we've got the president weighing in on interest rates. And then yesterday, when he lined up, he was like, big tariff announcement, 1 p.m, tune in. And like, I don't know about everyone else, but I was there at 1 p.m, like, okay, what's he going to come out with? And actually, he came out with just saying that, reciprocal trade tariffs, probably going to take until April, be done on a country by country basis. And obviously, that was pretty good news. But in summary, Trump headline risk is very prominent, even so early on in his presidency. My thing would be is that although we've seen knee-jerk reactions, none of his comments either on monetary policy or indeed this slightly murky tariff approach he's taking has materially seen a correction or a change in this sort of animal spirits in the equity space.
So reduce animal spirits.
Thank you. I'm quite in a poetic flow state at the minute. Do we think that's going to continue? That's the question I wanted to put across to you both.
So I can't rephrase the question. Sorry, less poetic.
I'll put it in layman's terms. Now, so do we think that the equity markets are going to continue to essentially buy any Trump-induced headline dip, or do we think there will come a time when the markets will get spooked by something Trump does or says, and the dip doesn't get bought?
Oh, that is a very good question. My own personal opinion is that we're very aware that Trump, bases his performance on, well, it used to be the Dow. Let's hope he now chooses the Nasdaq. But obviously, his first term, it was always the Dow's up 200. Look how great I am. He is very much. He likes the low, I should say, the low quality optics of just a high stock market or a stock market that's performing well, which makes me think that he's not going to go out there and do anything that will really rock the boat. However, which is why I do think you just keep buying dips on anything that comes from his headlines. But the problem is, you say that, and it only needs to go wrong once, right? And then you're screwed. But my own personal gut feeling is, it's just for dip buyers, this is exactly the kind of environment you want, because you're going to get headline risk. It's going to come off, and then if say you buy the S&P off 100 points or whatever, right? Yes, it might go. If that then becomes a 150 point move on the day or a 200 point move on the day, for a fact Trump's going to tweet stuff to try and reverse the stock market. No one wants the stock market higher than him. So that's I know that could be that people are going to look at that and just roll their eyes and go, well, he's saying that because he's a perma bull. I'm saying that because I was around trading the first time that Trump was around. Anytime the market looked a bit dodgy, out comes a tweet to try and prop it up. And also, there's just so much money in the market, man. The path of least resistance, which is a lot of the time what this comes down to, is higher for stocks. It's like I talk to Angie every day on the grain market blast. Slightly different in agricultural markets, because the whole saying for the agricultural guys is you got to keep feeding the bull. The bull needs to be fed, which basically means for agricultural markets you continually need bullish news to hit the wires. Otherwise, it will trade sideways. For stocks, we don't need that. As Michael Brown, who's listening now, will attest. We've been saying the path of least resistance is higher for, well, pretty much since halfway through COVID, and it's not been a bad play. But that's look. It's one of those. It's a dangerous thing to do, of course, because you're just assuming that he's going to come around and kind of prop up the market again. But you got to believe in history, right?
Yeah. Jay, do you think something comes out, that a Trump headline that causes a correction and follows through?
Sorry to interrupt. Sorry, Jay. But before, right? So let's frame it a bit better then for Jay to give a more succinct answer. What do you call a correction?
A correction is anything that exceeds 10% drawdown over the course of a 30-day period.
I like it. Right, go on, Jay.
I don't think any correction is going to be off what Trump's saying. I think it will be more implementations. And I think for now, every headline that comes out is going to be a dip to be brought when he goes on his rants on a weekend. But I do also think you're going to get like a boy that cried wolf, and the dips will be less and less because we're just used to it. You could even have a look at Friday last week. It's probably more towards it, but we had that little sell into the close. There may have been a chance that people are just de-risking because of what he might do over the weekend. So I think the effect is just going to be less and less, and it will be more so when these things actually get implemented that the market reacts more so.
Do you know what? I think you've hit the nail on the head there, mate. I think you're exactly right. I think the dips get less because people are like, well, we're just used to this. And outright, will it be anything that he says? Probably not. But yeah, I couldn't agree more with Jay there, to be honest. I think, and then in terms of trying to mirror this onto things that we've seen in the past or other kind of situations, we see it a lot now. This exact situation that Jay's describing with oil markets, right? It used to be a bomb or a missile goes off in the remote vicinity of Iran. Like 10 years ago, that'd be good for $5 on the open on Monday morning or Sunday night if you're trading Globex. Now it actually has to hit an active refinery somewhere, and there needs to be a load of rhetoric to back it up. And crude might gap open $3, and then it tends to be by the close of by official settlement, so it's 10:30 UK time at PM, the following day, it's closed the gap. And we, funny enough, it's something that me and Michael Brown, I think me and you guys have actually mentioned in over specifically with oil. Which is, this headline, all these people saying, oh, that's good for $100 in crude. It's bollocks. It's not. These are all moves to fame. So I completely agree with Jay. But again, we have to add the caveat that if something big does happen, then of course all bets are off.
Yeah. No, agreed. And talking about dip buying, another evidence of dip buying was seen on Wednesday with obviously CPI data, and to a certain extent yesterday, with PPI, both of which came in harder than expected. So I mean, like the core was up. I think it was the highest level since last June. Headline was highest level since last June. Core was highest monthly increase since last March. So we're actually seeing, you could say a material trend higher, but certainly a trend higher in the inflation dynamics in the States. But yet again, certainly, and there are other markets, for example, let's say gold, that is potentially flashing to us that investors are still cautious. But certainly from the perspective of equities and large cap equities, even this concern around the inflation market is not enough to dispel fears of a correction, which I think is also pretty notable.
Hello?
I think we lost him at the end there.
Yeah.
Sorry. Yeah, someone just called me. So my point on
it's Valentine's.
My point was, it was Valentine's, isn't it? They're starting early. But from where I was looking at this, the summary point to take away from it is through to the end of this year, there's currently 1.3 rate cuts priced for the Fed, which from my perspective, and I think if we take like an over under, which we love to do on these shows, I would say come end of this year, there will be more than 1.3 rate cuts. I mean, obviously you can't have the 0.3, but I would say I'd be
someone calling
more
him again
towards 2 rate cuts, as opposed to down to 0 based on inflation. I don't know what you guys are taking on that side.
Yeah, I would still lean towards 2 for the end of the year.
I'll take the other side of that, just not because I'm not just because I'm like that in general, but just want to. Yeah, exactly. I want to make a market, not just because I'm being an argumentative little girl. But I am that as well, admittedly. But yeah, no, totally. I'll go. Well, I'll take 1 because 1 wins, right? If we're pricing 1.3, I'll take less than 1.3.
And then other.
But no, it'd be.
Yeah, go on.
Go on.
No, I was going to change lanes. So
go for it.
The story I wrote about this morning that we put out, which is the story I don't think is actually caught as much attention as I think it should, was with Apple linking up with Alibaba in China. So long story short, Apple essentially can't get approval to put their Apple Intelligence features on local Chinese their iPhones because of the government, so they have to partner with someone local. So they've gone, and eventually there's been loads of back and forwards, and they've now agreed with Alibaba that Alibaba are going to supply and power it essentially. And Alibaba stock was up when I wrote it yesterday. It was up 10%. It's jumped another 6%, I believe. So it's at the highest level since 2022. Alibaba stock, that is. But really, when you actually delve into it, I personally think this could be a big win. Obviously, yes, for Apple, but I think someone like Alibaba that now taps into essentially Apple's infrastructure for hundreds of millions of new customers, and essentially the fact that they can use all of that data to improve their AI LLMs and all that jazz to develop them at a faster pace than their competitors. I think this is a huge win for Alibaba. And so, given how they're diversifying more and more away from e-commerce, I think Alibaba is definitely a stock to have on a watch list for 2025.
So I'm a bit confused about all this. So Alibaba, obviously a Chinese company. So is Alibaba like a safe Chinese company, or like on a white list then? In terms of, obviously we talk about like TikTok and ByteDance and all that stuff. So obviously you won't go near them with a 10-foot barge pole, although they were added back to the Apple and Google app stores last night. So obviously maybe things maybe that combined with what we've heard about Alibaba, maybe that the people making these, your Tim Cooks and that, maybe they know something we don't, and Trump's gonna go a bit looser on the old anti-China regulation, because it feels like only yesterday that anything that was based in China was kind of getting blackballed by all companies in America because due to the government.
Yeah. So Alibaba is a government-backed company for sure, but by the same token, actually, you could argue that's a positive in this scenario for someone like Apple, because if Apple are in bed with Alibaba, then you would think they'll help Apple to maintain favor with the Chinese regulators. So I would actually argue that, if Apple then wants to expand product set features within China going forward, if they're tied to a government-backed company in some form, that is actually a positive for Apple.
Yeah, right.
Yeah.
Got you.
But yeah, I thought it was a really interesting one.
No, it is. And like I said, I think the time again, we're trying to like we're adding 2 and 2. Well, maybe I am adding 2 and 2 and getting about 15, but this softening between kind of US companies and China companies, like Tim Cook wouldn't be pushing ahead with this unless he knows that it's going to be okayed by the Trump administration, right? We've seen the inauguration, we've seen Tim Cook in China recently, so maybe things behind the scenes are opening up a little bit, which it can only be a good thing on a number of fronts.
Agreed. Yeah, no, I agree with that. And then the only other one I wanted to cover in terms of on the equity side was Airbnb. I don't know if you saw this story. So overnight, Airbnb released their latest quarterly earnings. The stock was up 14% when I last checked, ahead of obviously market open shortly. And Airbnb are essentially trying to position themselves as the travel version of Amazon. So in the coming months, they're investing 250 million, developing like tours, classes, workshops. And so that essentially when you go, you want people on the Airbnb app much more regularly than just booking an Airbnb, booking a flat. And they want to for all of your traveling, living needs, they want Airbnb to be that place. And it's an interesting vision. Obviously, shareholders are like clearly on board with it. I'm a little bit more skeptical just because of I don't think the user engagement is there, or I think it's going to take a long time to develop that ecosystem. But I mean, we've all used Airbnb here. Interested to get your takes on if that's a viable strategy going forward and if it could be something really big.
Go on, Jay.
I'm not sure I've got too many thoughts on it right now. It's definitely an interesting strategy to kind of expand out, but I'm not too sure. Sorry to be
don't be sorry, mate. Don't be sorry. To be honest, I think expanding away from your basic, right, here's a house, rent the house, go there. I think they do need to diversify away from that a little bit, purely because we're seeing increasing amounts of anti-Airbnb sentiment regarding, especially in like these like resort towns and like, where there's not enough domestic housing to go around anyway, and people are coming in, buying up flats and just renting them out to holiday makers. We're seeing it in Portugal and in Spain, particularly in some of the islands, that the local governments are now having to, it's a vote winner. It's a vote winner to your local electorate to say, right, we're going to completely wipe out Airbnb. So that means the house prices come down. So I think they have got to play a game on this. And, I think, we fast forward 5 years, I think, there's going to be less Airbnb houses, or less Airbnb kind of apartments and stuff on the market in the places that they do very well in. Because we know, housing prices are going up everywhere, and there's, local governments are trying to find ways to alleviate that problem. And what do? Buy-to-let landlords, they're a difficult one to tackle because, they are your electorate as well. building 1 million new houses, or what is it, 5 million new houses, or whatever it is Labour are claiming they're going to build. That's a hard thing to do. However, you could very easily say, okay, we're going to restrict short-term rentals, by which they mean it's Airbnb by any other name. Therefore, you free up a lot of housing supply or inventory. So I don't know. I'm not a big fan of Airbnb because of that. So anything that they're doing to diversify away from that bog standard kind of model, I think can only be a good.
Yeah. The interesting one I read.
Just one thing on that that's just come to mind. Is it similar to like Uber? Could we compare it to that, where they've gone from a ride-hailing service and then they implemented food delivery and diversified out, and it has worked for them? Similar, like internet-based stock.
Yeah, no, I think almost becoming like the app of everything for home ownership or something like, or whatever you want to call it.
That's what he called himself. Yeah, the travel Amazon. Yeah.
Oh yeah, yeah. I think that. Yeah, I think that's can only be a good thing. And again, you can argue that one of the reasons why Uber was forced to diversify slightly was because they were getting lots of pushback again from local government around the world about the rights of Uber drivers, the competition on their domestic cabbies and stuff like that. That was all reasons why they were forced to kind of push out into what became the food delivery arm. So perhaps it was all the same.
Yeah.
I know. I'm waiting for the app that does Amazon, Uber, Airbnb all in one.
I mean, should we not just make that ourselves? Is it too? We've
spoken into existence. If we're going to do that, can we also do one where all of my streaming services are combined into one? Because I keep forgetting what I've subscribed to. Like I realized the other day I'm still subscribed to Paramount. I don't even know what's on Paramount.
There was that one. There was one film like 6 months ago that you wanted to watch, and so it was only available on Paramount. That's what happens.
And then I did the whole I'll get the free trial, and then I'll remember to cancel it.
Yeah.
Do I remember to cancel it? 3 years later, like that, I've paid him like 600 quid for one movie.
Yeah.
It's a great business model.
Intrinsic worth. Anyway, those are all the points from my end that I wanted to talk through. I don't know if anyone has anything else they wanted to flash up from the week I've missed.
Jay, you got
no, probably the only kind of asset that we haven't touched on this week is gold, which has just continued to kind of trickle higher. Obviously, quite a few of the different assets reversed that CPI move. Gold did have that initial spike down, didn't it? But it's been cruising higher. A few of the banks had kind of targeted 3,000 for year end with their price targets. But yeah, it's looking like a good haven. A safe asset amongst all of the volatility that's going on at the moment.
And I got to be honest, I always like to poke fun at gold bugs because they get their hearts up, and then the rug pulls, and then they get egg on their face. But this time, I'm wrong, they're right, so fair play to them. It's been a long old hold though. And what I do love as well is like they're getting all giddy. Oh, it's up 50% in 6 months or whatever like that, which is great. I'm happy for them. But when you compare that to like some other things that they could be invested in, for the same amount of time, say over the last 12 years or whatever, you're still massively behind the benchmark.
Wow. That's fair play, right? You're coming out all guns blazing.
But it's right. It's correct, right? It's a bit brutal, but it's like, okay, congratulations, it's on a bit of a tear, but pat them on the head, stick them back in their box. Oh God! Any golf clubs out there? I apologise.
On this one. I think I'm also. It's one of those ones where not that this always happens, but you do see it on occasions where key psychological levels, prices. You can argue it wherever, but like prices do get drawn to technical levels, and so I think for gold, the move is had. Yeah, I mean, do you know what? Like, I'd assign a 85% probability that it touches $3,000 within the next month.
Oh, it's got to. So it feels like it feels like it has to, and then I'm not going to say what I think it's going to do next, but there's every chance that it touches 3 and then the arse goes out. But who knows?
And especially when
No. I think we're about to say the same thing, so I'm interested to see what you were going to say.
Well, telepathic. What I was going to say is the other thing that I think sometimes gets forgotten with gold is obviously when you look at it as XAU, it's traded as a currency, and the other leg of that is against the US dollar, which most commonly quoted against. And so the other thing you've got to factor in that some of this move, certainly over the past couple of days, has been a weaker dollar. And so that's the other one is that, obviously we personally feel that the turn of the dollar has started to happen, and that we do see a weaker dollar. And so therefore, even if the gold leg remains fairly stable, you could still see this trade to $3,000 on the basis of dollar weakness.
Yeah. Do you know what? I think you make a very good point there. I was actually going to say something completely different. I was going to say that, as a risk hedge, things are looking better in terms of, seems like there might be peace on the horizon between Russia and Ukraine, all that stuff. So there's the risk premium could be eroded. But you made a very valid point, and not just gold, but even talking in terms of stock markets, often you've got to remember that you're pricing it in an underlying currency, such as dollars. It's why like Nikkei goes on a tear, and people are like, well, why is Nikkei going on a tear? It's because the yen's fallen out of bed. It becomes a lot easier. It becomes cheaper to buy the Nikkei. And again, with currency pairs, especially from I'm assuming most of our listeners are kind of experienced in markets and stuff, but speak to so many very, very naive currency traders or very new to the game, and they can't understand why they're long, or they might be short euro because they think the euro's going down, but they can't understand why it's going up, and they're looking at it and go, well, damn, the eurozone's getting worse and worse and worse. It's like, yeah, but you're only looking at the euro. You've got to look at what's the pair you've done. All right, you've done sterling euro. You've done you've got to look at the other side of the equation, and it's so bizarre how many people don't do that. And obviously, you've got to try and be there and try to educate people, because it's not all Lambos and whatnot. But just before we go, a couple of things I wanted to flag for people to have on the watch list. Again, we've got Trump today at 6 p.m. UK time to 1 p.m. New York time or Washington time. It's another round of executive orders are going to be apparently being flushed through, so keep an eye on that for your headline risk. Also, we've got this potentially a record-breaking cold front in the US coming right down through the center of the United States next week. Now, that will have impacts on your grain markets and also your nat gas markets, so keep an eye on that one before that will come in. That should be coming through before we speak next week, so it's worth mentioning it now. Also, an interesting article that Pepstone put out today about basically it's obviously promoting their 24-hour stock trading on CFDs, something which I was quite surprised how little people offer true 24-hour trading on stocks, but there you go, hats off to Pepstone for doing it. And they've got some cool charts. I have put it up in this in the old Jumbotron, I think, but I'll share it again. They've got some cool charts with like the Nvidia's performance between the different sessions, like intraday, overnight, and the first hour after the close. It's surprising how much moves are all overnight. One thing I did like was Tesla's, which is since March 2024, and here's a little statoid for you. The total gain March 24 is 70.7%. I should have quizzed you on it, but I've already posted it, so I can't do that anymore. So the total gain since March 24 for Tesla is 70.7%.
Yeah.
Intraday, it's only up 1.6%. So if you only traded US market hours and you were long Tesla, you'd only be up 1.6%.
That is a great start.
So whopping 60. It is whopping 69.1% of the whole move is done outside of New York hours. I think that's quite bonkers, to be honest. But also, one thing I do love is obviously it's Tesla, it's Elon Musk. Of course, it's 69%.
Yeah.
I was like, when I saw that, I had to double check it myself, and I was like, surely not.
Haters will say it's market manipulation.
Yeah. Oh yeah, massively. Market makers. No, it's not the market makers' fault.
That's a great start. That's a fantastic start. Thank you very much.
I know. Do you know what? As I started reading it, I was like, why the fuck have I not held this back as a quiz question?
Yeah.
I'm genuinely really pissed. I'm gonna have to go and have a word with myself.
Yeah, no, I agree though. Yeah, 24 hours, true 24-hour trading on Pepstone. Yeah, I mean that sounds great. And also even just having, because obviously even if the bid offer spreads are a bit wider, which would obviously be expected during outside of the actual market hours. Even just the fact that you can get a price is, as you said, because those jumps can be so high, like on an earnings day. If Tesla jumps 10%, even if you're having to pay an extra 20-30 bips in the bid offer, the ability for you to get in and out outside of that period is invaluable.
Yeah, I think on anything on that. Yeah, I know CBOE are actually coming around to the idea of 24 trading as well, because again, there's so much headline risk out in the world. Yeah, they're probably 10 years too late coming to the party, but if you are trading, if you do run overnight exposure, you might not, you're not going to need it every day. Fingers crossed, touch wood. But it's always good to know that if you need an out, there's an out.
Agreed. Yeah, agreed. Wonderful.
Well, on that bombshell, I can't. Oh, I'm still really upset with myself that I didn't save that stat back for a quiz. Oh,
you get us another one. Get us another one for next week. I'm sure there's some other absolute gold.
Right. Okay. Right. Yeah. I'm gonna come up with 3 for next week. Done. Right, guys. As always, thank you so much for getting on and giving us a rundown. Jay, I'm so glad you've got a decent connection today. Not
nice to finally be heard
20 years ago. Wonderful. Okay, guys. Is it next week I'm seeing you? Or is it
week after?
Week after. Of course it is. Brilliant stuff. Well, okay, guys. Thank you so much, listeners. Thank you as always for tuning in. And have a great week. Well, I hope you've had a great week. Have a great weekend. Keep it tight, and we'll see you next week.
All good. Thanks, guys.
See you later. See you guys. Bye.